Hello everyone, welcome back to the latest episode of Smart Money Flow. And for today's discussion, I'll just discuss whether the S&P 500 relief rally will continue or not. And to further look into that, here are today's topics. So first, I will talk a bit about the CPI number that will be released on September 13th. And then I'll talk about a little monetary policy done by the Chinese Central Bank, which will be effective on September 15th. And that could have some ripple effects on the stock market. And lastly, I will go through some technical analysis, go through some charts of S&P 500, Bitcoin, gold, crude oil, and the natural gas. So without further ado, let's begin today's topics. First, let's look at the CPI print. So I browsed through many websites and I found that the consensus estimate by the market is right now 8.1%. So that's the market expectation. Whether the real actual inflation number whether the actual inflation number will beat this number or below this number, I have no idea. But I do think the inflation is gonna go lower. Why? That's because we are seeing lower gasoline price and lower food prices. Because of these two elements in the CPI components, I do think the inflation will go lower. However, if you look at the market, like if you look at the daily chart of S&P 500, you could see that you could feel that the market is actually already pricing in this expectation at the moment. Another thing the market is pricing in is the expectation of a 0.75% rate hike in September. So the market is pricing in both of these two expectations. Just keep that in mind. Okay. That means when the event truly occurs, we may have the high possibility of sell the news. So that's why I think it's not necessarily a good thing for the market next week. And here's my prediction. My prediction is that unless the inflation goes down below 5%, I think the market won't be too excited about it, and it will probably just sell the news. And also, I don't think a lower CPI will be interpreted as good news. I think it could be bad news. Why? Remember that I talked about the real interest rate or the real bond yield is equal to the nominal bond yield minus the inflation rate expectation. So I mentioned that in the previous episode. You could check that. So we know that the inflation expectation or the inflation itself is going down. But at the same time, the Federal Reserve still maintains a hawkish monetary policy. Namely, the nominal bond yield is going to be the same or even continue rising higher. Due to that, so you have this variable continue to go up and this variable continues to go down. As a result, the real bond yield is going to go up even higher. And that's not good news for the stock market. Here's a chart of the 10-year tips, which very often be interpreted as the real bond yield. So you could see that it just reached the previous high and it's about to do a breakout. So if it breaks above the previous high, I don't think that's a good news. So that's pretty much everything about the CPI I want to talk about. And the next thing I want to talk about is the Chinese Central Bank's foreign reserve ratio cut. And this policy will be implemented on September 15th. What's the potential effect? So the potential effect is that the Chinese yuan may appreciate against the US dollar as a result. And if the Chinese yuan appreciate, other Asian currencies may follow the Chinese yuan. So if you know the DXY, the US dollar index contains some Asian currency as well. One of it is the Japanese yuan. So Japanese yen, sorry. So if the Japanese yen is gonna appreciate, then the DXY will drop temporarily. Okay, so if DXY drops, that could be good news for stocks. In particular, some companies that make their revenue in some other non-American currencies, or in Chinese yuan, or in current currencies of other emerging markets. So, for example, some China stocks like Baba or maybe JD, or maybe some Latin American stock like Meli, because they make their revenue in their local currencies. Their revenue is not in the US dollar. So if the DXY does drop, that could be some potentially good news for some stocks. Or for example, for the mega caps, like for example Apple. Apple, it makes lots of money from other markets other than the US market, right? Or maybe Microsoft or Tesla. It's good news. It's good news for stocks if DXY drops. Anyways, so here's the visualization of the correlation between DXY and the S&P 500. So the orange line is the DXY, and the candlestick charts is the S&P 500. So you could see that after the bear market began this year, there's a quite negatively correlated. They are quite negatively correlated. So that's the second catalyst you guys should pay attention to. So that's pretty much I want to talk about in terms of catalyst for next week, some macro catalyst. Okay, so the last thing I'll talk about is the technical analysis. So first, let's look at S&P 500. So S&P 500, let me turn on the Bollinger Band. So if you look at the S&P 500 daily chart, you could see that the it's moving towards the 20-day moving average, and I do think it will serve as a big, strong resistance for the indices. And so the bulls, they would want to see a breakout above the 20-day moving average, and the bears, for the bears, I think it's good to short around the 20-day moving average. It may break above the 20-day moving average, but the next resistance will be around 4,230, around here. That's where I think, because we have this strong trend line resistance, so it remains to be seen whether it can break above this trend line. I don't think it will break above this trend line, but if it does, that's pretty bullish, and I think the bears need to be careful. So that's for S&P 500. Then let's look at Bitcoin. Let's look at the for our chart. So for the Bitcoin, it has quite strong momentum at the moment, upward momentum. So I don't recommend anyone to short it. I think it still has some juice to go higher. So its next resistance is around 22.5k here. So if I'm a bear, I would try to short around here. I'm pretty bearish on Bitcoin in the long run. I don't think it can survive this tightening period by the central banks. So I wouldn't go long Bitcoin, but I would short it near the resistance. So its next resistance is 22.5k here, and if it breaks above the 22.5k, its next resistance is around 25k, pretty much. So that's it for Bitcoin, and then let's look at gold. Okay, for gold, I am pretty bearish on this chart pattern. If you look at the weekly chart, it's forming a huge double top pattern. This kind of double top pattern is pretty bearish. So if it breaks below the support here around 1690, if it breaks here, I think it's good news for the bears, and it will trigger a short entry, and most likely it will move much lower to the next support around 1560. So that's gold, and I think that's a big opportunity, and I may short it if it breaks the support. So that's for gold. And then let's look at crude oil. And let's look at the crude oil future. For oil, I think it's quite complex, and I do think for September it will drop a little bit lower due to many things that's happening. But I do think in October it may go back up because there's a catalyst I will mention in my episode next week. So it's a catalyst related to the China lockdown. It's quite political. I'll talk about it later next week. So if the China lockdown stops in October, then that's good news for oil, right? But for now, I do think it may go down a little bit further because it has some pretty strong downward momentum, unless it could break above $90 around here. So its next resistance is around $90 here. Unless it can break above $90, I don't think oil could do well for the rest of September. So that's oil. The last one will be natural gas. So if you look at this natural gas chart, you could see that it's pretty near the next support line around 7.65. So I don't recommend anyone shorting natural gas at the moment because it's close to its support. On the other hand, if it drop to the support and then bounce back up, if it bounce back to, let's say, around $9, I think it will create a pretty good short opportunity. The short side opportunity around $9. I may short it around $9 as well. That's for natural gas. Okay, I think that's all for today. So in conclusion, so my conclusion is that in my own humble opinion, I think the relief rally may continue, but I think in the longer term, the indices or the stock market is gonna continue to trend down. 3,500 remains to be my longer term target for the stock market. So that's all for today. Thank you for watching. If you like my content, please don't forget to hit the like button and give me a subscribe. Okay, I'll see you guys next week. Bye.